We're just going to touch on a few examples of the Western SRI-based criteria so that you have an idea of what are the guidelines that the SRI movement use or tend to use. And then when we look at the Islamic investing, you'll have an idea of what kind of guidelines Islamic investments, what kind of guidelines does Islamic investment guidelines tend to have or to incorporate. So you can have a comparison between the two. SRI-based criteria tend to say that you would have to avoid these particular industries. 1, tobacco production. 2, alcohol production, gambling, pornography or violent materials, manufacture and the sale of weapons, unnecessary exploitation of animals, the nuclear power generation, poor environmental practices, human rights abuses, poor relations with employees, customers or suppliers. The basis of all these prohibitions originally arose from the Methodist Church. John Wesley, who founded the Methodist movement in 1760, was, for example, one of the first people to say you shall not and should not be supporting the slave trade. So that, of course, naturally gave rise to fair employment practices, etc. Production of tobacco or tobacco production is not necessarily seen in all ethical funds, interestingly enough, but various of these you will see in most SRI or ethical funds that's present out there. This is another aspect of SRI investing which is not present within the Islamic investing or Islamic investment guidelines that you will see. The SRI investments or SRI investing have a positive approach or positive criteria, whereby their approach is basically to say we will choose and we will select stocks that do have these criteria or that do meet these criteria. For example, companies that supply the basic necessities of life, such as water, important to the daily usage, the daily needs of a human being, especially in certain countries. Companies that offer product choices for ethical and sustainable lifestyles. Companies that improve the quality of life through the responsible use of new technologies. Companies with good environmental management. Companies that promote and protect human rights. Companies that address climate change. Again, climate change is another reason or another example of how investors nowadays do not necessarily choose ethical investments because of religious grounds. This is because of the green movement, basically the belief that the environment is an important issue and we must support the globe, we must support environmental issues in order to ensure that we leave the world for our future generation. Then we have good employment practices, positive impact on local communities, good relations with customers and suppliers, effective anti-corruption controls. This is of course important in various, especially certain types of industries, like for example the BA scandal, etc. And then you have companies that have transparent communication. So when SRI fund managers are choosing companies or underlying stocks and shares, they would like to choose companies with positive they would like to choose companies who meet these criteria. This is basically the positive screen. You will see later on that Islamic investment guidelines do not have this positive screen. Islamic investment guidelines work merely on the basis of negative or exclusionary screens. Now let's take a look or touch on the Islamic concepts of socially responsible investing. The title there is basically to show that we are trying to see Islamic investing from the viewpoint of it being socially responsible investing. So firstly, we know that the basis of ethical concerns in Islamic investment guidelines, whether it be a fund or an index, comes from the Holy Quran and also the Hadith, the sayings of the Prophet Muhammad, peace be upon him. Now, this is not something which is commonly recognized, but I think increasingly people are beginning to recognize and see that Islamic concept of socially responsible investing is not based on the very narrow negative screening criteria, but is slightly wider. First is, of course, the negative screening criteria, whereby you say an Islamic fund manager cannot choose certain stocks because the companies operate in certain industries or sectors. Other than that, there is also recognition that Concepts such as wakaf and zakat, the distribution, which is basically a redistribution of wealth, is also a form of socially responsible investing. The concept of purification or donation of the uncleansed or impure amount from a fund manager's, say, income is also, which is from cash dividends, is also an example of redistribution of wealth to charities and those who actually should receive this income. So these are concepts which are increasingly being seen as part of the wider issue of socially responsible investing, or part of the wider point of socially responsible investing. As I said just now, this is because zakat collection and zakat distribution and donation to the needy, charitable donations, all of this are basically manners or ways to actually redistribute wealth. Now, the Islamic investment screens are again, of course, extra financial criteria. We know that the Islamic investment screens contain two criteria, or consist of two criteria. Number one is the industry criteria or sector criteria, and number two is the financial criteria. The financial criteria is not something we're going to examine here, simply because it is unrelated to socially responsible investing or to ethical issues. It is purely related to the issue of interest, the prohibition of involvement in conventional banking. So we're going to look at the first criteria, which is the prohibition from investing in companies that carry out the production or manufacturing in these particular industries. Alcohol, which is self-explanatory, conventional banking, financial, other interest-related activity, tobacco, gaming and arms manufacturing, entertainment, pork production, packaging, processing, etc. Now, it is said that of all this list, the tobacco, the prohibition from investing in companies that produce or manufacture tobacco, is actually because is there really because of the fact that Islamic players or Islamic finance players at the beginning, when they were starting to set up the list, they actually looked towards ethical investing in setting up the list as a guide. And so therefore this came into the negative screening for Islamic investing criteria. So you will see that in the industry, in the Islamic finance industry, although the basis of the prohibition from investing in alcohol, banking, etc. is obvious in there, nevertheless, for example, in the case of arms manufacturing and tobacco, it is said that this was a lot to do with looking at the ethical sector. For example, the ethical sector, at one point there was a fund which was, I think this was in 1971, it was called the Peace Fund or the Pax Fund, which is basically to basically voice its dissent against the Vietnam War. So Islamic investing, when we came up with these criteria, we looked towards ethical investment criteria in order to come up with our own guidelines, and hence you will see some of the similarities with the ethical screens. The other prohibition that you have is the prohibition of usury or interest, which, as I touched upon just now, then led to the development of the financial ratios. And then you have the prohibition of uncertainty gharar. This is not so much related to the selection of equities or stocks. This is usually investing as a whole, generally, hence the prohibition against using conventional derivatives or instruments which have an excessive uncertainty in them. We're not going to touch on those, obviously. Now, we've looked at the Western concept of socially responsible investing. We know the basis of it, as we said just now, they stem from Protestant and Catholic religious convictions. 1760, where John Wesley was the founder of the Methodist Church, and also the Quakers in the 19th century, which prohibited their members from supporting the slave trade. Islamic investing is, of course, based on Sharia or Islamic law. In other words, both approaches to investing have their foundations in religion. They have Abrahamic religions. And both approaches actually base their concepts on mankind being the steward on earth. And so this is why you will see, for example, the foreign colonials' stewardship criteria. They call it the stewardship criteria because they believe that mankind is steward on earth. The extra financial aspect of both investment approaches have a social purpose, and they exclude unethical businesses by investing in sin stocks. So obviously The two criteria are similar in that the basis of the criteria are the same, and they start on the assumption, or if you can use the word assumption, they start on the basis that mankind is a steward on earth, and also both therefore lead to the certain criteria or negative screens which say you cannot invest in certain stocks, popularly known as sin stocks. I think that let me just skip that. The few three bullet points there is basically an assessment of what I think on where the industry is and where it should be or where it could be. The other industries in SRI which are currently not in the Islamic screens, isn't there an argument for these screens to be incorporated into the Islamic screens? After all, if you look at the requirement for a company or a corporation to have fair employment practices, not to use child labor, etc., and to adhere to the ILO principles, these are the same principles as you have in the Sharia. So why do we not extend these principles into the Islamic screens? Because for the past 30 years, we have seen Islamic screens not changing. The industry screens or negative screens have not changed. They have remained frozen. So is there not an argument, especially in light of what's been happening of late, especially with the fact that now analysts can actually receive information with investigative journalism? We know which companies are actually breaching these labor laws, etc. We know which companies are on the right and we know which companies are not. So why do we not take a positive decision to actually incorporate these screens into the Islamic screens? The other thing is the environmental, social and governance criteria could be extended to Islamic screens. ESG is very wide, and you see it being embraced by the conventional SRI movement, or rather the conventional ethical movement, because SRI is a narrow concept. Again, issues such as corporate governance, surely it is time that fund managers who have the power to, and it is a power actually, who have the power to influence decision making within corporations, don't they have a duty or an obligation, if you are an Islamic fund manager, to persuade or influence the company to have a corporate governance structure that adheres to the Sharia? So these are issues, or to protect the environment, etc. So these are issues which, again, Islamic investing or Islamic fund managers at the end of the day could try and adopt. So I believe that Western concepts of of responsible engagement or active ownership can be infused into Islamic product. There is no reason why they cannot. So let's look at why we think they have not been infused so far. And this is why I think that it has not happened so far. Firstly, it's because of geographical or regional differences, which I think narrows it down to the question of the client. Who is the client? At the end of the day, perhaps I should leave that to the conclusion, because if you look at the regional or geographical differences, if you look at Asia, SRI is popular within or in Japan and Korea. Whereas Islamic investing is, of course, as we know, Indonesia, Malaysia, to a certain extent Singapore. So the countries where the investors are located are not the same. There is no overlap between the two. The other thing is, when you look at the Western Hemisphere, socially responsible investment practices are popular in Europe, led by France and Germany. It's popular in the UK also, but Islamic investing is not popular in Europe, but of course more popular in the UK. So if you look at it again, the conclusion that you come to is that the investors or the demand is not the same. We are not addressing the same people. We are talking to two different persons, Mr. X and Mr. Y. You're not talking to the same guy. So if you're Islamic investor, which is mainly going to be based in Indonesia, Malaysia, Singapore, in the Middle East, in the GCC region, if these investors do not want to see or do not think there is a need to have broader ethical investment criteria in their funds or in their companies or in the decision making when it comes to choosing their investments, then it is difficult to see the fusion of the two. Having said that, I would like to conclude by saying that firstly, ethical investing was not a demand-led industry. It was not a demand-led industry. It was a supply-led industry. And similarly, Sharia or Islamic finance industry to a certain extent, or perhaps even to a large extent, is a supply-led industry. Of course, there are large aspects which is demand-led, but at the end of the day, industry players who have been able to see other concepts and have been able to learn from other concepts and other parts of the wider conventional industry, they can actually take the decision to incorporate these practices into the Islamic finance industry and present it to the Sharia board as basically something which they have come up with, and ask for the permission for this to be approved, which naturally will be approved by the Sharia board and then sold on to the client. Perhaps Islamic investing, especially when it comes to the issue of ethical and Islamic investing, and I refer to genuine ethical investing, needs to be supply-led also. We need to come up with the products. And we have seen, or there are two examples. One example I've picked up here is the Sustainable Asset Management and Gatehouse Bank. They have come up with a water fund, which is based on, of course, the promotion of supply of water. This is an ethical fund, which is genuinely ethical, not just, a mere, it's not just a say so. I mean, it really is an ethical fund because of the concept of promoting or supporting companies that supply water in some, and ensure the clean production of water. The other fund I would like to talk about is FNC Investments. They will launch the Sharia Sustainable Opportunities Fund. This is something which we at BMB Islamic have worked on, hence my knowledge of this particular fund, which is to be launched. It has yet to be launched. But FNC is an ethical fund manager. They have their own processes, and they only manage funds in an ethical manner. So when we say that they are ethical fund managers, they really are ethical fund managers with a history of being able to manage funds in an ethical manner, and they have actually, together with us, applied the concept of Sharia or Islamic investing criteria to ethical investment criteria and fused the two in order to come up with a product which I genuinely believe is ethical. And I've actually spoken with a few people on this point, and there is recognition of the fact that the word ethical in Islamic investing is loosely used. It is not genuine ethical from the point of view, from our understanding, from the popular usage of the word ethical. Perhaps it's time that more people in the industry, and why should we have only one or two funds? We should have more people in the industry come up with real ethical and Sharia compliant funds, because this is the whole point. If people have been criticizing the industry for years, saying that the industry the spirit of Sharia is not being upheld, then fair enough. Then why don't we say therefore, that we uphold the spirit of Sharia by fusing ethical approaches? Charity funds, zakat funds, these are the kinds of funds, or these are the kinds of investment approaches that we can take in order to see a greater awareness of socially responsible investing or criteria being applied into Islamic investing. So my conclusion is that at the moment, the success of SRI investments and Islamic funds do not merge, and they do not correlate. They have both grown tremendously in leaps and bounds, but they have grown in different regions, in different areas, managed by different fund managers even. And there are different players in these two industries. They do not meet. So, but then at the end of the day, both concepts do not contradict each other, and they are compatible, as you can see when you look at the two screens, and they're complementary. They do not conflict at all with each other. So, and because both industries encourage more ethical and socially responsible practices, isn't there a case for us to focus or fuse or jointly develop the two approaches to create a really superior investment product, which we can then cater for, or at the end of the day approach a greater number of investors and make Islamic investing also more popular, because we're able to widen the attractiveness of Islamic investing. Thank you.